Why is Bitcoin trading more than $1 trillion ahead of every other cryptocurrency? On the TFTC podcast, James Check, lead on-chain analyst at Glassnode, breaks down this unprecedented market separation. In today's discussion, we'll examine three central points: how Bitcoin's daily moves now dwarf entire crypto sectors, its evolution beyond cryptocurrency competition, and what the massive 1.6 trillion market gap really means. Before we continue, if you enjoy these breakdowns, hit the like and subscribe button for more TFTC content. Full episode linked below. The final segment reveals a shocking insight about market structure that could change how you view Bitcoin's position in the financial world. Let's start with James explaining just how massive Bitcoin's market movements have become.
When we hit the all-time high the other day, we got to 109K. Bitcoin's, that 10% daily candle was 40% of Ethereum's market cap, right? In one candle,
holy crap,
Bitcoin did 40% of Ethereum's market cap. It's irrelevant in scale, right? It's a footnote. So we've already got this divergence. But let's imagine this cycle plays out and we get this whole crypto casino and blah, blah, blah. Whether Ethereum declines and others rally, or Ethereum just doesn't rally as much as the others, whatever it looks like, just imagine the speculative fever that will be happening when there's a possibility that Ethereum is going to get flipped, when the nearest rival is within plus or minus 10, 20% of it. Just imagine the speculation that's going to be going wild on, no, it's going to be Ripple, no, it's going to be Solana, it's going to be this. That is going to be, I think, one of the topping signals. If we get this kind of cycle, I think that's what it's going to look like. Maybe it's Trump coin, who knows?
What James is explaining here represents a seismic shift in Bitcoin's market presence that proves our first argument about Bitcoin's enormous market movements. When Bitcoin moved to $109,000, that single day of trading represented 40% of Ethereum's entire market value. This is absolutely staggering. Imagine a company like Apple moving so much in one day that it equals nearly half of Microsoft's total worth. This scale of movement demonstrates how Bitcoin has grown so large that its daily fluctuations now dwarf entire sectors of the cryptocurrency market. It's not just about the size of these movements, it's about what they represent in terms of market maturity and institutional adoption. When we started 1031, Bitcoin and other cryptocurrencies were often mentioned in the same breath. Now that comparison doesn't make sense anymore. The scale has become too different. James points out how this might affect future market dynamics, especially when other cryptocurrencies compete for second place. This competition might actually become a signal for market tops, as speculation runs wild over which coin might become the runner-up. But the key point remains, Bitcoin has moved beyond this race entirely. It's no longer competing in the cryptocurrency market, it's competing in the global financial market. This massive scale difference is our first clear evidence of Bitcoin's divergence from the crypto market. As striking as these market movements are, James is about to explain an even more fundamental shift in how Bitcoin has evolved beyond cryptocurrency competition, but make sure to stick around for the final segment, where we'll uncover how this separation is creating a completely new market structure.
If you go and look at the 2017 cycle, there weren't really no stablecoins. I think Tether existed, but not at any size. BTC was the pair. You bought Bitcoin, you sent it to Binance or Coinbase or whatever, and you traded shitcoins. So BTC was the thing you had to buy. It was the casino chip to go and bet on other stuff. Now, Bitcoin being special has left that realm where it actually doesn't need that demand anymore. It doesn't need to be the quote pair for the casino to achieve its value proposition. In the 2021-22 cycle, that was Ethereum. You had to buy ETH, the casino chip, to go and play in the DeFi yield farm. You get your 55,000% APY, which rugged you the next day. You needed to buy the casino chip and hold it to do stuff. Whenever an opportunity came up, you can't send your money to Binance, buy the ETH, send it to your wallet, and then go and do the thing because the thing's already pumped. You needed to have the ETH in your wallet.
This evolution James describes as crucial to understanding Bitcoin's current position in the market and proves our second argument about Bitcoin's evolution beyond cryptocurrency competition. He's walking us through how Bitcoin's role has fundamentally changed over time. Back in 2017, Bitcoin was essentially the entry ticket to the cryptocurrency casino. You needed it to trade other coins. This created artificial demand because people weren't buying Bitcoin for Bitcoin, they were buying it as a means to an end. But now, that dynamic has completely shifted. Bitcoin has broken free from this role, and other cryptocurrencies like Ethereum have taken its place as the casino chip. This change is significant because it means Bitcoin's value is no longer tied to the speculation in the broader crypto market. Instead, its value is increasingly based on its own merits as a standalone financial asset. Think about this like how gold evolved from being a currency for daily transactions to becoming a store of value. Bitcoin has undergone a similar transformation, but in the digital realm. Sup freaks, this rip of TFTC was brought to you by our good friends at BitKey. BitKey makes Bitcoin easy to use and hard to lose. It's the easiest 0 to 1 step, your first step to self-custody. If you have friends and family on the exchanges who haven't moved it off, tell them to pick up a BitKey. Go to bitkey.world, use the key TFTC20 at checkout for 20% off your order. That's bitkey.world, code TFTC20. This shift represents a key piece of evidence supporting our thesis about Bitcoin's divergence from the crypto market. It's not just that Bitcoin has grown bigger, it's that its fundamental role in the financial system has changed. The fact that Bitcoin no longer needs to serve as the entry point for crypto speculation shows how it's matured into its own distinct asset class. This maturation process is exactly what we've been seeing play out in the market, and it helps explain why Bitcoin can move so independently from other cryptocurrencies. We've seen Bitcoin's massive market movements and its evolution beyond cryptocurrency competition. But in our final segment, James reveals perhaps the most compelling evidence of this market separation, a growing trillion-dollar gap that's reshaping the entire digital asset landscape.
Bitcoin is often talked about. If you flip Bitcoin, the industry goes to zero because suddenly there's no faith or trust in any of it. And I actually do agree with that because I just think Bitcoin, it has such a divergence now. And if you want to see the divergence, plot Bitcoin's market cap minus Ethereum's market cap. It basically looks like the Bitcoin price chart because Ethereum is so irrelevant now that it just keeps growing, right? We're over $1.6 trillion in difference. It's just not even the same ballpark. The same is not true for all these other assets. Once you get that flipping over and they're like trying to work out which one's which, I think that's going to be a speculative mania, and that probably is going to look like the top. Ultimately, the flipping will be the top.
James's analysis of the $1.6 trillion gap between Bitcoin and other cryptocurrencies reveals something profound about market structure and conclusively proves our third argument about fundamental market separation. This isn't just about Bitcoin being worth more. It's about a structural divide that's actively growing wider. When James explains how Bitcoin's dominance keeps increasing while others become increasingly irrelevant, he's highlighting a key market dynamic that many investors miss. Think about this like the difference between a major global currency and a local one. They might both be currencies, but they operate in completely different spheres of influence and utility. The gap isn't static, it's actively widening, and this demonstrates that Bitcoin has evolved into something fundamentally different from other digital assets. When James talks about the potential for other cryptocurrencies to flip positions amongst themselves, he's pointing out how that competition exists in a completely separate realm from Bitcoin now. The market has essentially split into two distinct categories: Bitcoin and everything else. This level of separation is unprecedented in financial history. We've never seen an asset class emerge and so clearly distinguish itself from its peers in such a short time frame. The fact that the gap keeps growing suggests this isn't a temporary trend, but rather a structural change in how the market values these different assets. This massive and growing separation serves as the final piece of evidence in our thesis about Bitcoin's divergence from the crypto market. It's not just about price or role. It's about a fundamental restructuring of the entire digital asset space. The 1.6 trillion gap isn't just a number. It's a clear marker of Bitcoin's emergence as a distinct asset class, operating in its own league, with its own rules and its own trajectory. Will Bitcoin continue dwarfing the entire crypto market? Let me know in the comments. I read every single one. And if you found this market analysis interesting, you'll want to watch our breakdown of Bitcoin's decreasing risk profile. Click the video on your screen now. Don't forget to like and subscribe for more daily content. Thanks for watching. Stay humble, stack sats,